Hello and welcome to Pro Trader Strategies Market Commentary for Friday, July the 29th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today in the form of Chicago PMI came in at 55.8, was expected 54.3. Now remember, that's the Purchasing Managers Index, so anything above 50 is expansion in the economy. We also got University of Michigan Consumer Sentiment, came in at 90, right as expected, was 90. So that economic data and across the pond was all pretty much in line with expectations. The one thing that is going on right now, we have cats and dogs living happily together. We've got basically the broader market up on the day from crude oil to gold to bonds, but we'll get into that in a minute. As you can see, this crude oil finally starting to cut off some of that massive slide we've seen for the past 2 weeks. Crude oil has just been in a downward spiral up on the day by 11 cents, but in that $41 a barrel handle that I was talking about yesterday. And then on to gold, as you can see with gold/GC is up $12 on the day, pushing much higher despite the fact that the overall equities are higher as well. Bonds, again, same thing, up a half a point on the day, up 16 ticks, pushing higher even in lieu of the overall equities pushing higher. As you can see, this is the E-mini NASDAQ/NQ up 4 points on the day. This was down quite a bit earlier this morning, was looking pretty bearish. Then with the economic data points in the form of Chicago PMI coming out, seemed to be the catalyst to push everything higher here. E-mini S&Ps/ES still stuck in this range, but we busted out above yesterday's high, and it's really starting to wind up pretty tight. And so I decided to put on a couple of trades to add a little bit of long deltas just to protect myself if this market starts to spike higher. Looked like it was going to on this rally earlier today, and I'll show you that on the breakdown. As you can see, this is the 15-minute chart. As that PMI number came out, that really caused the market to really spike. It was very correlated to that. We've since seen it come off a little bit. We broke above yesterday's high. I decided I probably should be a little bit more cautious. I'm really short deltas in my portfolio, so I added a little bit of long delta in there. And if you remember, with long and short deltas, long deltas mean you're long the broader market or long that underlying. Short deltas means you're short the broader market or those underlying. So I am in my portfolio short delta, which means I'm short the broader market, very bearish. I needed to add a little bit of long delta, and this seemed like the easiest way to do that. So I bought some SPY call options, which I'll go into in a little bit. But first things first, a couple of things I'm looking at doing right now is covering my Oracle trade. It's pretty close to 50% of max profit. So I'm going to be looking to cover that either today or maybe even wait till Monday. But I sold the an August 42.43 call spread in there, and I'm going to look for an opportunity with this down move today, try and cover that for somewhere around 13 or 14 cents. We'll have to see if that works out. On to a couple of the earnings trades that I did. In Amazon, I went into the July weeklies, and I sold the 670 puts for right around $1.27 and bought them back for a penny this morning. Got the direction right on that. Volatility came out of it, so that was a nice little trade. I did that one really small just because it is a really big dog in there. And then with WYNN, I didn't really have a real direction in mind for this, so I decided to put on a strangle in there and did the July weeklies again. Sold the 96.5 puts and the 113 calls to create that strangle. Originally sold it for $1.11 yesterday, bought it back for 29 cents this morning, so that was nice. I actually let that ride out. It came down and tested my 26.5 calls. There wasn't a whole lot of participation in that market, and just waited it out for it to kind of pop back. It came out with better than expected earnings, so the sell-off was really looking to me like the longs were covering some of this nice big rally that they had seen from 85 to 105, so $1 rally there, and decided to just hold off on that before I covered that trade, and it worked out pretty well. This is the trade that I added some long deltas with. As soon as we broke above the 17 area, broke into that 17 area, I decided that was the time to start looking at adding some long deltas, and went into the SPY and went pretty far out September, because I don't want to have that theta decay happening right away and give me a little bit longer time to be correct, and bought the 217 calls for $3.70 on that. The other thing I'm looking to do today is roll out my Apple position from the July weeklies, which expire today, to September, and try and collect somewhere around $1. I might have to go down closer to 90 cents to get that rolled out in time, collect a little bit more credit, increase my break-even point on those 100 calls that I'm short to right around 101, if you will. So if I can get a pullback, then I can look to kind of get out of that rather quickly. That's about all I got for you guys today. We're having a webinar this afternoon, and it's going to be on the butterfly, which is going to be great. In a market like this, where we see the market really winding up pretty tight, it's going to pop to one way or the other, and it's going to do it in a pretty violent fashion. So this butterfly will take advantage of that, and if we get that big pop right away, you'll see volatility increase, which will also help out this strategy. All right, that's about all I got for you guys today. Hopefully you guys can all make it tonight, this afternoon, for that webinar. Go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.